Thanks everyone being here this week for FinTech Week. And Dante's a tough act to follow, but we'll try our best. So my name's Chris Hayes. I'm a partner at Thorn Partners. We're a bipartisan government relations firm based in DC, and I lead our digital assets work. And I wanted to briefly have my panelists introduce themselves.
Thank you for having us here. My name is Grant McCarthy. I run the Bitcoin Policy Institute. We are the largest cryptocurrency think tank in the country. What that means is we've assembled a cohort of a few dozen academic fellows, PhDs in environmental science, philosophy, economics, and they're all studying the intersection of what they got their PhD in and Bitcoin. Our mission with the Bitcoin Policy Institute is really to help America navigate the rise of Bitcoin. This technology didn't exist 20 years ago, and now today, Bitcoin is the 5th largest asset in the world. It is a $2 trillion asset. And so I envision a world where America and Bitcoin thrive and flourish together, but it is very important that those two things are symbiotic and are not working at odds.
Reuben.
Thanks, Chris. And a big thanks to Kevin for the invite to be here. My mom was born and raised in Washington, D.C. I've been here for 20 years, so it's really exciting to be part of this community. So really excited to be here today. As was said in the introduction, I'm Reuben Smith-Vaughan. I'm the head of policy for the Americas at Ledger. For those of you that don't know Ledger, we are the largest digital asset security company in the world. If you haven't seen them, these are our cool little devices that we make. They allow you to self-custody your private keys when you're trading on digital assets. We've sold over 7 million of these devices since our founding a little over 10 years ago, and about 20% of the world's crypto is currently, through their private keys, being leveraged on our private mechanisms that we've created, like Stacks and Flex and Nano, and none of these devices have ever been hacked. So for us, this is something that's really important, this ability to provide a security opportunity for individuals to leverage the blockchain and digital assets, but really to self-custody all of those assets, which is something that Dante talked about previously, that ability to be your own owner of your digital assets.
Great. Well, I think we'll jump in and we'll sort of dive into the questions around what's happening legislatively. I'm sure many of you out in the media have been learning a lot about this. We had a stablecoin bill, the Genius Act, passed into law earlier this year, which was a major effort that passed in a bipartisan fashion. And it has some potential lessons for us as we think about broader crypto market structure. So right now there's 2 bills. There's the Clarity Act, which is a House version by both the Agriculture Committee, which covers commodities, and the House Financial Services Committee, which covers securities, which has passed the House in a bipartisan way, and it's sitting at the Senate. And in the Senate, as the Senate does, they're doing their own thing and not doing anything with the House bill. And so why don't we talk a little bit about that? How do you guys think about sort of the path for crypto market structure, whether it's Clarity, whether it's the Senate discussion draft? What are the hurdles? What do you guys think?
So when we think about market structure bill, basically what we're talking about is establishing rules of the road for the entire cryptocurrency industry. And the bill that passed in the House is this behemoth of a bill, hundreds of pages, and it's been debated for years and years. When I think about where we're at and the political viability of creating market structure for cryptocurrency, sometimes I think a lot of people believe that these are new discussions that we're having, like the conversations that we're having just because we're dealing with cryptocurrency, that they're novel and it must be innovative. And in reality, I think they're conversations that we have been having every time we talk about new innovative technology. So let's rewind 30 years ago and think about in Washington, the advent of the internet, how were we thinking about regulating really this early stage protocol that we didn't even know what it would be yet. And 30 years ago, we had a decision to make. Do we want to support an internet that is open, that provides fair, equal access to a number of different players, and maybe it's a little bit messy? Or do we want to support an internet that really favors incumbents and has higher compliance costs, maybe is a little bit safer in some terms, but we lose out on some of that innovative edge? 30 years ago, we chose an open internet. And ultimately look at the rewards and everything that we've reaped from that decision. Silicon Valley today would not exist without decisions we made 30 years ago from a regulatory perspective. And America would not be the 21st century global superpower from a capital and financial perspective if we had not made these decisions. So all this is to say is we are making the exact same choices today when it comes to the Clarity Act. And we are deciding right now, do we want an open system where builders and developers can innovate and try new things? Or do we want a closed system that favors incumbents and a few players who can afford millions of dollars of compliance costs? So right now, the political path to clarity is actually coming down to one or two of these key choices around open source development and decentralized finance, and basically allowing small players to build and innovate using Bitcoin, using different cryptos, and just building tools. And it seems like that's a political sticking point right now, because some people would rather see us basically create banks 2.0.
Reuben.
Yeah, so maybe I think one of the big things we need to think about, and a lot of us live in Washington, D.C., so we get to live in the heart of the beast, if you will, right? If we're having this panel in like Idaho or in Nebraska or in even California, you'd be having a very different conversation. But most of you are plugged in because we're forced to be plugged in. It surrounds us every single day. You know, half of our spouses are stuck at home right now because they can't even work. I think the big shift that we've had over the last 5 years is that we were originally talking about if this is a space that should be regulated. And I think that conversation's gone, right? We're now at a place today where there's now agreement across the political spectrum about the if is gone. The question is now, how do we do that, right? And we saw through the Genius Act, and Dante talked about that first piece of legislation that was passed, bipartisan passage in both the House and the Senate, and is now a law today that sets really the global mandate of how we should be using stablecoins, and I think sends a really powerful message globally about what that should look like and how other governments should think about it, and really helps put the United States at the forefront of the conversation. So I think now that we've gotten past the Genius Act, we've established that there is bipartisan agreement about the need to do regulation. We were able to do that effectively in the House, right, through the Clarity Act, which importantly got bipartisan support. I think it had something 60 plus members of the Democratic Party joining Republicans to pass that legislation.
I think it was 78.
78, thank you, perfect. Even more, I always underestimate, it's better that way. And I think what that sends as a message is that there is this bipartisan agreement after years of discussing the issue, right? This bill didn't come out of nowhere. It spent 5 years really being developed across the political spectrum in the House to ensure there was agreement. And so now we're in the Senate, and I think both the government shutdown, which is creating more political strife in our country, unfortunately, and really creating more divisions, is gonna slow down the process for that bill to move forward. I think there's a lower probability now that we'll see the bill pass this year. There was also recent movement by a number of the Senate Democrats who are helping through that negotiation. They put forward their position that also will likely slow down the process even more. And so I think the likelihood that the bill passes this year is unfortunately much lower than it was, say, 6 weeks ago. I think we're still really, really hopeful, and a lot of us that are in this room will hopefully do a lot more advocacy to explain to both Senate Republicans and Democrats the importance of passing this bill as soon as possible. Unfortunately, the longer we wait, as you all know, the political cycles in this country, once we enter next year, will become even more challenging to get approved. And I think the longer we wait, you know, we're ceding that ground to other countries to make decisions. And Dante talked about the European style of regulation before coming to Ledger. I worked at Amazon, and so all things EU regulation, whether it's the AI Act or GDPR or the OTT directive, these are things that have really stagnated innovation in EU, and they're unfortunately exporting those policies around the world. And I think one of our big concerns is, if market structure isn't passed in the United States, do countries around the world adopt MiCA, which is the regulation that the EU has put in place? And I think what that would really do for this global industry, because this isn't just the US industry, it's global, is unfortunately really negative.
Just want to mention a little bit about market structure for maybe folks who are less familiar. The reason why this is so important is because the base layer infrastructure, what allows public blockchains to run, is really determined about whether those tokens that process the transactions are securities or commodities, right? And that's been the fundamental issue that crypto market structure is about addressing. So you can't have payment applications with stablecoins. You can't have putting capital markets, tokenizing traditional financial instruments without being able to run those on public blockchains. And in order to have regulatory certainty, you need market structure to have certainty for those systems to ultimately be built. That's why this is such a critical bill, and it's actually much more complex, I would say, than stablecoins were. One of the main components, as we saw under the last administration, is really whether these tokens are unregistered securities or not, right? That has been the fundamental argument under former Chairman Gary Gensler. There are many enforcement actions against exchanges like Coinbase and Kraken, et cetera, that were basically accused of being unregistered securities exchange because they facilitated trading in these specific tokens. But then there were also the layer one blockchains themselves, whether those were issuing unregistered securities. And so market structure is really about clarifying whether those are actually securities and have a way for them to come in to compliance to adjust for the technological elements of them, or whether they're commodities and governed by the CFTC as opposed to the SEC. And so the bills in Congress, as we know, the Clarity Act, the RFIA, which is the Senate version, it's a little less exciting nomenclature. When you think about the House bill, it came out of Agriculture and Securities under the Financial Services Committee as one piece. So you knew what were commodities and what were securities. In the Senate, the Agriculture Committee has actually not released their bill, so we only have half the bill in the Senate version. So the banking bill. And so as you guys think about that, particularly with the CFTC only having one chair who may not be there much longer, and the SEC a bit more staffed up, how do you see that turf battle playing out between the SEC, CFTC, both in the legislation and in terms of, is the SEC, because it's more well-staffed, do they have more ability to take control of the process here?
I think in the immediate term, there's going to be very little enforcement, regardless of what happens here. Perhaps an annoying answer. The winner isn't the SEC or CFTC. The winner is Bitcoin. It is the only cryptocurrency that's had any sort of regulatory certainty with or without market structure. It is a commodity. It's always been a commodity. It's called digital gold for a reason, right? There's no CEO of gold. There's no owner or company that owns all the gold in the world, just like there's no CEO of Bitcoin. It is a decentralized network that millions of people around the world use. And there's a reason why this thing is disrupting and reshaping global finance and actually helping change global financial order. A lot of other cryptocurrencies, I would say, are more analogous to like really interesting startups. And that type of innovation, incredibly, incredibly important. And market structure is seeking to like provide clarity here. No, actually pun intended. But Bitcoin is in a class of its own. And if there's one thing you take away from this conversation, I would hope that it is there's Bitcoin and there's everything else. And ultimately, they can complement each other. And America can win if we support both of these. But recognize Bitcoin doesn't need the market structure bill. That's one of the beauties of the innovation.
Yeah, I mean, I think framing it as a turf war is unfortunately not beneficial, I think, to the average everyday individual in the United States, right? I think what we need to think about is how do we help them collaborate more effectively? And I think they're starting to do that. You're actually seeing some collaboration between the two. I think ensuring that there is a division between what the SEC has been doing historically and shifting that mental model for how they're approaching blockchain and crypto and digital assets, I think is really important, and empowering the CFTC to do what they do best, which is regulate commodities, and ensuring that they're empowered to do so is important in creating that division. I think is to the best benefit of both consumers here in the United States, but also entrepreneurs who are trying to figure out. I think that lack of clarity, also pun intended, is what's really impacting the industry in a really negative way and forcing companies to operate offshore and in other places. And so if we can get that clarity and help create that division so they can effectively focus on what they do best, would help drive a lot more funding and innovation here in the United States.
Well, you heard it here, guys. Buy Bitcoin. That's what I learned from this panel. So, speaking as we talk a little bit about the SEC and the agencies, Chair Atkins at the SEC has been really focused on working with industry. I would say with his Project Crypto, this potential innovation exemption. I'm not even sure what will be in that. Lots of great ideas if people want to stick something into that. How do you guys see sort of industry and government, particularly? We're sort of seeing this collaboration at the SEC. How do you guys think about that, and where should they be collaborating?
Yeah, so much of this is just base level education. It might feel trite at certain points, but for years and years, we mentioned some of these Wells notices, these really enforcement actions that were being taken upon different actors in the industry, and there was no two-way conversation. It was one way being handed a piece of paper, and so there wasn't really an effort to understand how the technology worked, who was using it, how decentralized were these different networks. And I do think recently that is kind of the key step forward that's been taken is it's more of a two-way conversation. I'll plug something that we've been doing and that I know other people are doing as well, but we have a congressional fellowship program where we're able to actually staff crypto experts within congressional offices, just give them a free staffer who's a pure play expert on Bitcoin and crypto technology. And that type of acceptance from both Democrats and Republicans within the past year has been a complete phase shift compared to where we were 2, 3, 4 years ago.
Yeah, I mean, I think you mentioned this idea of like regulating via enforcement, right? And I think that stopping is incredibly important for the industry because it allows the industry to, one, continue to innovate, but two, have an understanding of what the actual rules are. And that's why clarity is so important. I think, you mentioned education. I think that's the most important thing. We have the benefit of living in Washington, D.C., so we can go to Capitol Hill anytime we want. And I think there's a huge lack of understanding. Dante talked about the hearing that he got to sit behind Zuckerberg. And if you watched that hearing and tried to hear members of Congress try explaining what Facebook was to the founder of Facebook, it was so cringy to have to listen to. Like, it's actually fun to watch because they have no idea what they're talking about. And I think that's even further taken as you talk about things like blockchain and cryptocurrencies and digital assets. And so it really is on all of us, and thank you for being here and continue to get more educated on the industry. But then we also have to go to Capitol Hill and help members of Congress who are, 80s and 90-year-old and really are challenged to understand what a digital asset is, and really help them understand why this is so important and why it's so important to the average American, why it's important for American leadership, and why it's important more broadly moving forward to give individuals the opportunity to really be the owners of their own future. And I think that education is on all of us, and it's both at the regulator, where they're actually, for the first time, open to hearing from us, but I think even more importantly, as we try setting in stone what is the structure of this market that we want to continue to grow moving forward.
Yeah, I think that's right. I mean, when you think about the industry, building something that's useful, that people can understand how it's used, I think one of the challenges digital assets has had is people in Congress, before they sort of saw the light more recently, the thought was, well, they're just buying this stuff on Coinbase and it's made up money in the internet. As opposed to when Uber came out, people saw, oh, car picks me up, takes me somewhere. I see the value. And I think as more people start to build applications for payments, financial markets, you'll see, we're working on the base level infrastructure here.
Yeah, and I think the one other narrative that I think we really need to work on as an industry is this idea of illicit finance, right? There's this external perception of cryptocurrencies and digital assets as something that is used effectively more than anything else for money laundering, right? Or to help pay for the drugs that are coming into the United States. And I think that's, just if you look at the actual data, couldn't be further from the truth, right? The vast majority of illicit finance today runs through our traditional banks, like 2 to 5% of global GDP. Crypto is actually way harder to use because it's on a blockchain, right? At the end of the day, individuals in the government have access to see how all those transactions are moving. And so I think helping governments understand that, helping us think about, the AML rules that exist today that have not worked, right? Hence why illicit finance is still a massive problem. And the idea of then taking a failed system and try putting it on to something that is actually already inherently transparent is another part of that education that I think we really need to focus on. Because again, going after illicit finance is something that I think all of us agree with. We all want to get to the bottom of how do you stop that from occurring. But I think this idea of taking something that's already failed and trying to put it onto something that actually provides more transparency as a starting point means that you're not taking a step back and thinking about how do we actually work together to solve these challenges.
I think that's a great point. I mean, the illicit finance argument is often used as an attack line while ignoring the fact that any way you can move a store of value is going to be used for nefarious purposes and for legitimate purposes, and think about the best way to confront that makes total sense. I'm going to ask one question to you guys because I know we only have a little bit of time. What single policy change would most strengthen U.S. competitiveness in digital assets?
So within the Clarity Act, there's a provision that ensures that the spirit of cryptocurrency remains, and this is it's called the Blockchain Regulatory Certainty Act. Don't worry about that term. Just understand that it allows people to build tools using cryptocurrency. It allows open source developers to build tools and not be punished for the actions of people who use their tools. Now, this is incredibly important, right? If every time Apple was responsible for somebody making a phone call and bullying somebody or committing a crime using one of their phones, Apple would not be in business. And so it is very important that we use that same principle when we think about people building using Bitcoin and crypto. So Save Our Wallet, saveourwallets.org. This single provision ensures that we remain decentralized and actually keep the spirit of Bitcoin, blockchain, crypto. And if we lose that, we've lost the plot. We've lost it all.
Yeah, because we're at time, I'll just say I think it's approving legislation that codifies all the things that have been achieved even in the last 8 months. This idea that in 3 years from now or in 7 years from now, this could drastically change because you have a new head of the SEC or a new administration. This idea that we'll continue to do that will always inhibit the ability for innovators like you to create new things. So I think that's first and foremost domestically, but then I always think internationally, right? The idea that individuals in Argentina, places that suffer hyperinflation, won't have access to owning their own digital assets is incredibly frustrating for me to think about. I grew up in Nicaragua, and so a place that struggles to own your own anything, honestly. And so this idea that we would adopt something like MiCA globally instead of something so well thought through like the Clarity Act is, I think, something that would be really detrimental to just humanity as a whole as we think about being able to own your own future.
Amazing. Thanks so much, Chris.
Thanks
And
everyone.
team, and Grant, and